As usual, I don't want to keep this too long, so I just want to get going right away. On the hourly chart of SPXU, we had a breakout from a downtrend and a tremendous push higher, reaching my 100% target. That'd be a measured move up. And I take the height of the first wave of that move, which I am actually just already supposing to be wave 1 in a motive move, and I apply it to the bottom of the retracement of that wave, which I am assuming is 2. Now, it's important to remember this could be a simple ABC move and not really all that bullish. So it's important to keep that in mind. I would like to think, though, that this formation we see showing up on, maybe it's the 15-minute, is a flag. I really hope that this is a small high and tight flag, and if that's the case, then I'm going to be taking this Fibonacci extension tool, and I'm going to be doing another one of these guys, and it'll be to the upside, though. So if we get a full move higher, which I anticipate we will, we're looking for 1476, which isn't enough to save my $15 calls, which expire tomorrow, but it will save my $14.50 calls. My $14 calls were saved today. I was able to actually profit on the $14 calls. How cool is that? Let's go ahead and have a look at SPY. SPY on the hourly, currently falling, and we did actually reach another target of mine. Yes, I'm supposing that this push down off the high of 418 was a motive wave for motive count wave 1, and that this weird bounce and rally we got from Powell when he spoke the other day, that was number 2 of that 5-wave form, and now we are beginning to form a third wave heading lower, and I'm already counting on that going to be an extension, so this is probably just the very beginning. 1, 2, and waves 3. You can see I took the amplitude of wave 1 here at the sub-minuet, the yellow level, and I just applied that range to the top of the second wave. And if that wave comes in longer than the wave that preceded it heading down, then yes, we're making progress. And that is the basic concept of the motive mode in Elliott wave analysis. Bearish reversal coming in below at 410.55. Daily close way below there. This tells me that one of the potential bullish motive wave counts has been broken. So let's just go have a look, figure out which one that was. So that high at 410, let's see. 410 would be right here. So there's an ABC correction shown on this chart heading higher. I'm going to see that here. I believe this is the minor degree. And remember, just like at SPXU, I'm assuming that we're in waves 1, 2, and working on 3, but it could be A, B, and C. So my bias is bearish, and that's why the charts are labeled this way. But it's important to remember, it's not over till it's over. But closing below the top of wave A would disqualify it as a potential wave 1, because now we're starting to push down. Unless this is a massive third wave extension, in which case we'll come down and bounce. Really, that count truly breaks down when the price breaks down below 374. So still a long way to go before the bears really have it in the bag. But the touch on the RSI here at 70 and reversing, you can see there's even head and shoulder patterns here in the RSI. That's pretty convincing. Also, implied volatility ticking up on the day, ticking down yesterday, but that's because it was an inside trading day. I believe that this has all been corrective in nature. We'll now find ourselves in a new motive wave heading lower. I'm going to put this into a line chart really quickly because as I talk about this, I seem to notice that on a line chart it's different. See, the close is different. The close of this peak A is actually at 407.68, and today's close was like right there. Wow, what was the close? 407.09, and this was 407.68, so technically it did close below that range. This is the point of no return for the bulls. If the bulls can't get past here, then it's like, yeah, we've definitely got a bearish trend beginning to form. I did draw this yellow zigzag a couple of days ago, and I said, that looks good. I'm going to leave that there. And look at the price doing almost exactly that. Tell me there is any other retail trader out there on YouTube making that kind of analysis. That is spot on the money. And I'm not even monetized. Moving into AMC, the meme stocks. I tried to tell everyone that these rallies, they were probably corrective in nature. And while acknowledging their bullish potential, I have looked at that skeptically and said this looks more like a 3-wave correction. And now we're heading lower. There is oh man, I gotta find the chart pattern here. I think it's under my Capavision charts. Yes, I saw the price as moving through, and I'm going to put this into a more relatable chart for you. I know most people don't actually look at line charts, but I do. An ascending broadening wedge through here with a downward breakout, the price target being the beginning of the pattern. And arguably, depending on where we want to start the pattern, we could say that it's already there, we've met that target. Now, what's important about this push down is if we pass this valley for at wave, this would actually be a minor wave A up here. Do a little labeling on the show. Hey, look at that. I'm opening my charts up. I'm doing analysis. So this would be A, this would be B, and this would be C at the minor level. Once we pass that valley at minor level B, or you know what I'm talking about, that is going to be retracing 100% of this move higher, so this could no longer be a potential bullish wave. So watch that 497 level very carefully, very carefully. We could also be pushing up and about to make explosive highs, right? We're testing the breakout price from this massive downtrend. The price broke out at around where the price bounced earlier today before the close. So it's not like it's hopeless for AMC. At this point, the ball can be thrown either way. It's just going to be a lot easier for the bears. A lot easier for the bears. GameStop finally resolving this quadruple RSI divergence on the hourly time frame. You're going to see I have these red arrows 1, 2, 3, and 4. And you're going to notice that the RSI comes down all the way down to 33, but as long as we don't reach that actual extreme, I count this as diverging. Once the RSI makes a full cross of the indicator, I reset that kind of analysis, right? It's important to know how to read the RSI. It's an oscillator, and I could go on for a long time about the RSI. It's my favorite indicator probably by far. It's a close tie between that and the implied volatility. You can see implied volatility is still in a downtrend, technically. I think that's the low. So yeah, implied volatility on GameStop, this is still going to be kind of a low IV play. It'd take a lot to get the price, the IV to go up. Probably a drop below that 1879 level. Because again, 1, 2, and 3, or A, B, and C, and passing below that wave B removes the possibility of it being the beginning of a bullish motive wave. This looks like a nice zigzag forming up on GameStop. We'll see what the markets do tomorrow. AMC and GameStop are both very prone to more downside, and SPY to me looks like it wants to go lower. GNS kind of tanking with the markets a little bit, bounced towards the end of the day more than other things. SLV and GLD taking a big hit. Yes, I flipped on these guys and I said, we're going down now because guess what? The dollar's going to bounce. And I consider this to be a buying opportunity in GLD and SLV. And I'm very serious about that. Like, I would just be buying up as much of this as I could if I had any real cash to spend, but I don't. Now, that was the precious metals. I mean, those are equities based on the precious metals. They aren't actually precious metals. Let's check on VIX while we're here. I have this tremendous falling wedge and an upward breakout. There you go. Look, it's happening. Very clean. Up, down, up. 1, 2, 3. Push higher. Now, this is a great example of motive mode, and I wish I could go into it a little bit more, but simplistically, I want to say waves 1, 2, and then wave 3 going higher is going to have 5 waves inside of it, right? That'd be the first, the second, and the third of those waves. So wave 4 could drop, and then we see a push higher. So there could be a gap down or a gap up in SPY, a gap down in VIX, and then a move from there. It's very possible that tomorrow actually is not going to be as red as I think it is, but I believe that we're going to go into a vertical rundown in SPY. Specifically, vertical rundown. I'm calling it. That's what I expect. The dollar did push up and came up to about where that trend line was and is starting to pull back down. I feel like I had to turn on after hours here because this is not actually an equity. Yeah, it came up a little higher in after hours, I think. Was that after hours? Nonetheless, you can see that we are pulling down, that this was a pretty good forecast. This is just, these lines, they're just, I just drop them down. I don't really try to make them precise, but that's accurate, that we had a push higher up to this level and now a push down. What's likely to form from here, honestly, is probably a huge push up. This looks like a massive flag, doesn't it? Just look at it. It's beautiful. Behold its glory. The dollar's going to come roaring back, and that's probably going to be because of interest rates more than anything else. Now, that's all I have for today. This was really long. Happy trading.